Big endorsement of India's rise under Modi government. Global financial powerhouse Morgan Stanley has hailed India's success story in the last 10 years. Latest Morgan Stanley report highlights 10 big transformations in India and their impact on how India has transformed in less than a decade. The report states how this current India, in fact, is different than what it was in 2013. The report defends the top-performing Indian stock markets over the past 25 years and highlights 10 significant changes that have taken place in India in the last 10 years, specifically because of policy changes since 2014. In fact, my colleague is now joining me live on this, Sakshi Batra. Sakshi, Morgan Stanley hailed India's growth. What is it that the report states worked for India?
Well, that's right. Morgan Stanley in its latest report has mentioned how India is a different country from what it was back in 2013. Morgan Stanley's report cites 10 big changes that have been brought in the last decade that has helped India in gaining positions in the world order. Now, the first thing that they've mentioned in the report is the supply side policy reforms that have been undertaken. Also said that India's corporate tax, which has become at par with the peers, that has helped in the country's progress. The infrastructure, which has picked up pace in the last 8 years or so, it has cited tremendous growth in the incremental infrastructure projects like the national highways, broadband subscribers, renewable electricity, electrified railway routes that have really kicked up progress and contributed to the GDP. The report also cites how formalization of economy has been taken place after the GST reform was undertaken, also with the GST collections which are on an upward trend and with the latest figures at record highs of over 1.8 lakh crore rupees, the rising proportion of the digital transactions now as a percentage of the GDP. Remember, back in 2016, the digital transactions in India were just about 4% of the entire GDP, and today the figure stands at 76.1% as of the last financial year. Now, the report also mentions the rising direct benefit transfers to the beneficiaries over the years that has also helped the country progress. The report has also praised India's focus on foreign direct investments. We are seeing most of the sectors today which have allowed easy access to foreign direct investments today. As government support for corporate profits, the report also mentions how MNC sentiment is at a multi-year high, with India really outperforming China on this sentiment. It also cites how India's service export market share has accelerated, resulting in offshoring boom as well. In short, the report says manufacturing and capex as a percentage of GDP will increase steadily by roughly about 5% by 2031. It says the export market share could double to 4.5% by 2031, nearly 2 times from the 2021 levels as well. It also mentions how India will drive a fifth of global growth in the next decade, and India's next decade will resemble China if 2007 to 2011. It also mentions how GDP and productivity growth differentials will swing in India's favor going forward from here. It predicts a major shift in consumption basket, with India's per capita income increasing from $2,200 to about $5,200 by the year 2032. Now, Morgan Stanley has also predicted a profit boom, saying that the shares of profit in GDP has doubled from all-time lows that were hit in 2020, and they're all set to rise further, maybe even double from here on, leading to strong and absolute relative earnings of corporate India. Now, India's resilience on the global capital market flows has also reduced. It mentions how market sensitivity to US recession and US Fed rate changes have seemed to now fade away. Morgan Stanley has also predicted an unprecedented growth in financial services in India till 2032, and an energy boom along with the discretionary spend being on the horizon. However, the report has warned of key risks. A key risk being fragmented general election outcome in 2024. That could impact the predictions, and also the impact of a global recession if it deepens or elongates for long, and rising commodity prices, which may be a key watch from here.
Sakshi, thank you so much for joining us with all of those details. Now, 5 big changes that India has seen. Number 1, corporate tax at par with peers. Number 2, infrastructure development is in the fast lane. That is one of the big changes that the report talks about. Number 3, digitization that has formalized the economy. Again, a huge development, a huge step forward. Number 4, decoupling with the United States economy. Again, a big step forward as far as the Indian economy and its own growth story is concerned. Number 5, outperforms China on MNC sentiment. So MNCs, of course, now looking to India with a lot of hope in the market and the economy and, in fact, the resilience of it. So those are the 5 big changes. What about the 5 big impacts that have been witnessed as a result of these changes? Number 1, disruptive growth in pipeline. Big impact. Number 2, unprecedented growth in financial services. Also, number 3, will emerge as a key driver of global growth. That is one of the expectations from India, and India is definitely on that trajectory. Number 4, export share to more than double by 2031. The big impact which can be anticipated. Number 5, lower impact of US recessions. So clearly, India has shown its resilience and is not likely to face the impact of US recession and elsewhere in the world as well. So these are some of the highlights of the Morgan Stanley report.